sometimes traditional stock analysis just lets you down. And that's how I feel about the stock of Palantir. And it is the best acting stock in the S&P 500, up almost 8% today after great earnings and 109% year to date after this quarter. Palantir has bedeviled many of the analysts who covered the company ever since it came public almost 5 years ago. They have a difficult time evaluating it because it seems so overvalued. The software company / AI consultant trades at over 200 times next year's earnings estimates, making it the most expensive stock in the S&P 500. And look, if you're relying on traditional metrics like most analysts, Palantir's valuation looks psychotic. But I think Palantir is one of those rare stocks that defy standard analysis. When we're dealing with fast-growing software companies, I don't use earnings per share. I like to judge them based on something called the Rule of 40. It goes like this. You take the revenue growth rate and some measure of profitability, maybe the operating margin, maybe free cash flow margin, and if they add up to more than 40, your stock might actually be cheaper than it looks. Palantir's revenue growth accelerated to 48%, and its adjusted operating margin stands at 46%. That's an extraordinary combination that yields a score of 94. That's on the Rule of 40 test. I follow a huge number of stocks. I don't know a single other one even remotely near that terrific number. Palantir may be cheap, maybe incredibly ridiculous on earnings per share, but on Rule 40 yardstick, it's ridiculously cheap. I'm not kidding. Mind you, Palantir's exalted status is not based on small numbers. They had $1 billion in revenue this quarter. 2 years ago, they did $2.2 billion in revenue over the course of the entire year. What makes Palantir so elusive? First is the seemingly bombastic claims of CEO Alex Karp. He says that because his company is hyper-efficient, he expects to get 10 times the revenue that the company has with 3,600 employees. They now have 4,100 employees. People hear that and they say that's absurd. But I'm willing to give Karp the benefit of the doubt because he keeps delivering. I think he's going to hit his target. The other problem here, people don't really know what Palantir does. This quarter, they gave two solid examples that hint at the style and breadth of what they can do for an organization. The chief revenue officer, Ryan Taylor, points out that Citigroup shared that the customer onboarding process and relevant know your customer and security checks that once took 9 days now take seconds, thanks in part to Palantir. Or how about this one? Quote, Fannie Mae recently announced they're working with Palantir, decreasing the time to uncover mortgage fraud from 2 months down to seconds, saving the U.S. housing market millions in future fraud losses, end quote. And yes, I am trying to be as dispassionate as possible because the rah-rah rhetoric and the special terms that the company uses to describe its business leave a lot of investors cold. I mean, who the heck talks about ontology in this business? When Karp says that the quarter is a, quote, once-in-a-generation, truly anomalous quarter, and we're very proud, and we're sorry that our haters were disappointed, but there are many more quarters to be disappointed, and we're working on that, too. He sounds like a paranoid maniac, but he's actually he's a sane speaker. The bluster has scared professional money managers away from the stock, even as it delights the amateurs who bid the stock up endlessly, both before and after the market. I've been behind it the whole way. When it was at $50, I said it would go to 100. When it got to 100, I said it would go to 150. And when it got to 150, as it did last month, I said it will go to 200. We're already well on our way. How did I know this? Because of the Rule of 40 valuation method, and it truly does work. Palantir might be able to keep working its magic for years. It's the steadiest high flower I've seen in ages. But if the stock's going to keep climbing, the bears need to keep betting against it. Those are the people who don't understand Palantir's greatness. They're the ones whose backs this remarkable run is built upon. Once all the bears become bulls, that's when you run out of upside. Fortunately, that hasn't nearly happened yet. I like to say, as always, the bull market summer promise just for you right here on Mad Money. I'm Jim Cramer. I'll see you tomorrow.